Namaste everyone. Today in this session I would like to explain the easy procedure to pass the journal entries. Easy procedure to pass the journal entries I am going to explain you. Please put a lot of attention over here. So many of the students really feel very uneasy while passing the journal entries as they may not be very much clarified in regards of the different accounts, classification of accounts, steps to be followed to pass the journal entries. In this session I am going to explain you all regarding all the issues related to the journal entries, and I would like to clarify all the differences, basic concepts while passing the journal entries. First, in this session, first of all, let us know what is the meaning of journal. What is the meaning of journal? What is the meaning of journal? Journal is nothing but it is a date-wise record. What record? Date-wise record of all the transactions. It is a date-wise record of all the transactions with the details. What details? What details it comprises of? It details of accounts debited and credited, and amount of each transaction, What does it mean? Journal is nothing but it is a date-wise record of all the transactions with the details of accounts debited and credited and the amount of each transaction. So they are saying that it is a complete record. It is a detailed date-wise record of all the transactions with the details of accounts debited and credited and amount of the each transaction. So I hope you all understood what is the basic definition of the journal, what is the meaning of the journal. Now, in order to pass the journal entry, we have to follow certain steps over here. So, now I am going to explain what are those steps to be followed to pass the journal entries. Okay? Very easy concept, just put your a little bit attention over here so that we can understand the steps. Steps to be followed to pass journal entries. First step number 1. First of all, we have to identify the two accounts. We have to identify two accounts in every transaction. In each transaction, we have to identify two accounts. This is the first step. Second step. After identifying two accounts, we should classify those accounts into real account or personal account or nominal account. Above identified two accounts should be classified into real account or personal account or nominal account. Okay. First step is we have to identify the two accounts in each transaction. Then the second step is after identifying those two accounts, we have to classify those accounts into the real account or personal account or nominal account. So third step is, that means after classifying those accounts into real account or personal account or nominal account, we have to find out the rules of debit or credit. We have to find out the rules of debit and credit. Those rules are called as golden rules of accounting. I will be explaining you the golden rules of accounting simultaneously. Yes. The step 4 is after finding the rules of debit and credit, we have to identify which account is to be debited and which account is to be credited. Identify which account is to be debited and which account is to be credited. I hope you all understood the 4 basic steps we have to pass any journal entry in the accounts. First step is, again I am repeating, first step is we have to identify 2 accounts in each transaction. Whatever the transaction, we have to pass journal entry. First of all, we have to identify the 2 accounts. After that, after identifying the 2 accounts, we have to classify those accounts into the real account, personal account or nominal account. After classifying, we have to find out the rules of debit and credit as per the golden rules. After finding out the rules of debit and credit, we have to identify which account is to be debited and which account is to be credited. Which account is to be credited. I hope you all understood up to these points. Now, next, I am going to explain you the classification of accounts. Classification of accounts. Classification of accounts. Mainly, accounts are classified into 2 types. Mainly, the accounts, classification of accounts. The accounts are being classified into 2 types. Mainly, one is personal and second one is impersonal. Again, in the personal account, we have natural and another one is artificial. One is natural and another is artificial. In impersonal, we have real account and another one is nominal account. Real account and another one is nominal account. In real account, again real account is classified into tangible. Tangible is nothing but which is visible. Tangible, and another one is intangible. So once again, just I am explaining you out. Accounts are classified mainly into personal and impersonal. In personal account, we have natural personal and artificial personal, and in impersonal, real accounts and nominal account. In real account, we have tangible and intangible. I hope you all understood the basic classification of accounts. Let me explain what is the personal account. What does it mean? Personal account is nothing but the accounts which are related to individuals. Accounts which are related to individuals or persons. Individuals or persons are known as personal accounts. Personal accounts includes, as we earlier explained, personal account involves what? Natural persons. One is artificial persons. Okay, natural persons and artificial persons. Natural persons are nothing but human beings, individuals. Okay, human beings or whatever the accounts related to individuals, human beings are called as natural resources. So natural resources, accounts which relate to individuals. Example, Shanmukh account, Rachna account, Sirisha account, etc. Then what about artificial persons? What about the artificial persons? Who are the artificial persons? Artificial persons are nothing but artificial persons are those persons which relate to the group of persons or firms or institutions. Firms, associations, association of two or more persons, a group of individuals, institutions, etc. Example, you can go over there. Institutions like Infosys, Franklin Templeton, and you can go with Andhra Bank, LIC Limited, etc. I hope you all understood the basic difference between the natural persons and the artificial persons. Natural persons are the personal account which related to natural persons are accounts which relate to individuals. Individuals in the sense like human beings. Examples are individual persons, Sessionmukh account, Rachana account, Sirish account, etc. Whereas artificial persons, coming to the artificial persons, what are the accounts related to the firms, association of two or more persons, and institutions, etc. Example, Infosys Limited, Franklin Templeton Limited, Andhra Bank, LIC Limited, etc. I hope you all clearly understood. And the next one is impersonal account. Impersonal account. Impersonal. Impersonal account. In impersonal account, we have the real account and nominal account. In real account, what does it mean? Real account is nothing but accounts relating to the properties and assets which are owned by the business concern. Properties and assets which are owned by the business concerns. Business concern. It may be tangible or intangible. Tangible or intangible. Example for real accounts: land, building, machinery, furniture, stock, goodwill, etc. I hope we all understood the contents of real account. Real accounts are accounts related to the properties and assets owned by the business concern. It may be the tangible or intangible. And examples for the real account is the land, buildings, machinery, furniture, stock, goodwill, etc. Now it's nominal account. Nominal account. What are the accounts related to the nominal account? These accounts do not have any existence, form or shape. Generally, the nominal accounts don't have any kind of existence. Don't have existence, form or shape. They are related to income and gains, losses and expenses of business concern. Example, salary account, commission account, rent account, discount account. These are the examples of nominal account. So, nominal account do not have any kind of existence, form or shape. It mainly relates to the incomes, gains, losses, expenses of the business concern. Example, salary account, commission account, rent account, discount account. I hope you all understood clearly the classification of various accounts like real account, personal account and nominal account. Now I am going to explain you a problem. In order to clearly explain you how to pass the journal entries, now I am going to solve a problem over here. Now we can see over here, a question saying that journalize the following transactions of Mr. Nag. Journalize the following transactions of Mr. Nag. Yeah, we have dates and we have the transactions over here and we have the amount of the transactions. As we earlier learned that journal is an step by step a date wise details of the transaction with the specific amount of the transaction. I hope you all understood. So this is the transaction, we have to pass the journal entries. The date, the transaction and the amount. Oh yeah, we have some transactions. Let us go thorough with this kind of transactions. In the 2018 January 1st, the first transaction is Mr. Nag started business with cash. Mr. Nag started with cash, rupees 45,000. Second, on January 2nd, we have another transaction, purchased furniture worth rupees 10,000. On January 3rd, we have purchased goods worth rupees 5,000. Purchased goods worth rupees 5,000. On January 4th, sold goods for cash. Sold goods for cash, rupees 10,000. Okay. Then on January 5, purchased goods rupees 3,000 from Mr. Bean on credit. Purchased goods rupees 3,000 from Mr. Bean on credit. Rupees 3,000. On January 8, sold goods for credit to Mr. Shekhar, 4,000 rupees. Sold goods for credit to Mr. Shekhar, 4,000 rupees. Cash deposited into the bank. Cash deposited into the bank, 2,000 rupees. Received cash from Shekhar. Received cash from Shekhar, 2,000 rupees. Cash withdrawn for personal use. Cash withdrawn for personal use, 3,000 rupees. Paid rent. Paid rent, 500. Paid rent, 500. Salaries outstanding, rupees 1,000. Salaries outstanding, rupees 1,000. Interest paid on borrowings, rupees 400. Interest paid on borrowings, rupees 400. Paid cash to Mr. Bean. Paid cash to Mr. Bean, rupees 1,000. Goods withdrawn for personal use, rupees 500. Goods withdrawn for personal use, rupees 500. Received check from Mr. Raju. Received check from Mr. Raju, rupees 2,000. Received check from Mr. Raju, 2,000. Issued check to Mr. Lal, rupees 2,000. Issued check to Mr. Lal, 2,000. Interest allowed by the bank. Interest allowed by the bank, rupees 200. Withdrew from bank for office use, rupees 300. Withdrew from bank for office use, rupees 300. Received commission, rupees 100. Received commission, rupees 100. Now, in order to understand the procedure to how to pass the journal entries for the question, you have to be aware of three golden rules. So what are those three golden rules? In golden rules, for the real account items, the golden rule is debit what comes in. Debit what comes in. What comes in. Credit what goes out. Debit what comes in, credit what goes out. For the real account. For the personal account, debit the receiver, credit the giver. Debit the receiver and credit the giver. For the nominal account, debit all expenses and losses. Credit all incomes and gains. For the nominal account, debit all expenses and losses, credit all incomes and gains. Once again, I am revising you out. For the real account, the golden rule is debit what comes in, credit what goes out. For the personal account, debit the receiver, credit the giver. The nominal account, debit all expenses and losses, credit all incomes and gains.